A bunch of you sent me articles about this next story, and it shouldn't come as a surprise, but it should be extraordinarily alarming because of what it means. The accounting firm, which has represented Trump's business for a decade, is now saying, we can't trust, you can't trust, David Pakman, I can't trust the financial accounting records that they put together for the last decade because they may be based on underlying fraudulent information. And the accounting firm has abandoned Trump and says they will no longer represent Trump's business. This is unbelievable. Yahoo News, NBC News reporting Trump Organization's accounting firm says it can no longer vouch for financial statements from the company. This is a major story, and it is not getting the attention it deserves. The accounting firm Mazars USA said a decade's worth of financial statements from the Trump Organization can no longer be viewed as reliable, according to a letter made public Monday by New York Attorney General Letitia James as part of her civil probe into Trump's company. Mazars also said it will no longer work with the Trump Organization, meaning the company may have to get new financial statements that could complicate its ability to secure loans. In a February 9 letter from Mazars Group General Counsel William Kelly to the Trump Organization's chief legal officer, the auditing firm said its work from 2011 to 2020, quote, should not be relied upon. In the world of corporate accounting, this is like a groundbreaking statement of there's some really bad stuff going on here, and we, meaning the accounting firm, want to try to get the hell out from under what might be coming in our direction. They also added, we write to advise that the statements of financial condition for Donald J. Trump for the years ending June 30th, 2011 to June 30th, 2020, that's fiscal years, should no longer be relied upon, and you should inform any recipients thereof currently relying upon one or more of those documents that those documents should not be relied upon. Understand that that is a signal to all of the lenders that have given Trump money on the basis of these financial statements. They're being told, you made financial decisions about the Trump Organization's creditworthiness on the basis of accounting documents that we, the accounting firm, are telling you cannot be relied upon. Here's a copy of the letter sent out. Dear Alan, this is to Alan Garten, the chief legal officer of the Trump Organization, and from the accounting firm. Dear Alan, it's like a Dear John letter. We write to advise that the statement of financial condition for Donald J. Trump from 2011 to 2020 should no longer be relied upon, and you should inform recipients relying on those not to. We have come to this conclusion. This is the best part. We have come to this conclusion based in part upon the filings made by the New York Attorney General on January 18th, 2022, our own investigation, and information received from internal and external sources. They are saying, in part, the investigation being carried out by Letitia James of New York has brought to their attention the corruption and alleged fraud, potential fraud, I want to be careful with how I say that, committed by the Trump Organization. And we already know what this relates to. This mostly seems to relate to the valuation of assets. What Michael Cohen and others have told us the Trump Organization would regularly do is you take a building. Let's say we agree that in the real world, the building is worth $20 million. When it comes to assessment for tax purposes, the Trump Organization would say, look at this crappy building. It's not worth $20 million. It's worth $10 million. So tax us on the $10 million valuation. And they would submit documents supporting that that's what it's worth. On the other hand, when the Trump Organization wanted to get a loan using that same building as collateral, they would say, listen, this building's not worth $10 million. This building's not worth $20 million. This building's worth $40 million. And so you can give us, if it's an 80% loan to value or whatever the case is, you can give us a loan on the basis that the collateral we're offering you is worth $30 or $40 million rather than 20. And that would encourage a lender to say, we can give them $28 million because if they default, we take the building and we sell the building for 30 or 40. When the building's only worth 10 or 20, giving a $28 million loan with that building as collateral obviously is not a good idea for the lender. So that's the gist of what has been done. Other notes from the letter. Due in part to our decision regarding the financial statements as well as the totality of the circumstances, we have reached the point such that there is a non-waivable conflict of interest with the Trump Organization. As a result, we are not able to provide any new work product to the Trump Organization. This is an example of rats abandoning a sinking ship, and it's crimes all the way down. And consider that Trump was elected partially on the basis that he was a really successful entrepreneur. And then we found out, well, he's had a bunch of business bankruptcies, but he said that was him just using the tax code to his advantage. This additional thing suggests that even the degree to which his business was successful was based upon accounting distortions, or at least potentially on that basis. And when I hear you can't trust these accounting documents and we're not working for you anymore, what I hear is we committed fraud for the boss and we're going to get caught and we're doing what we can to wash our hands of him. And I think anybody who knows anything about Trump knows that cutting corners is sort of the name of the game. It's the status quo. And people continue to love the guy and defend the guy, but this is not looking good at all in terms of this investigation into the Trump Organization. Will it ever hit Trump? I still don't think so. And I know many of you get mad when I say that, but I don't think so. Let me know if you have a different view on that particular piece. One of our sponsors today is Masterworks. Masterworks makes it possible for people outside the 1% to invest in world-renowned art. Think Picasso, Monet, Banksy, by letting you invest in shares representing an investment in these pieces. Art as an asset class has outpaced the S&P 500 over the last 25 years with almost no correlation to the stock market, which is a key indicator I look at when thinking about diversification. Masterworks analyzes 60,000 data points to decide which paintings to acquire, each painting ranging from $1 to $30 million. Then they file a public offering with the SEC, effectively securitizing that painting. There's always a wide array of paintings to invest in, so you can not only diversify into a new asset class, you can diversify across an asset class. Masterworks is a really unique platform, a very interesting way to diversify against the market craziness right now. And if you want to learn more about Masterworks and sign up, use my link in the description to get priority access.